Cast is now starting. All attendees are in listen-only mode.
Hello, everyone, and welcome to another edition of IETA Live. This is a carbon market virtual series that we've been running for, throughout the pandemic, and we're delighted that you could join us today. We're excited at IETA about taking stock of developments around the world on carbon pricing. It's sort of what we do for a living on behalf of our members, who are all companies and entities that are active in carbon markets around the world. With the Glasgow Climate Summit just around the corner, I mean, I'm horrified. I looked at my phone and it's just 10 days away, so we're in the 10-day countdown for Glasgow. Many countries are looking at what their nationally determined contributions are, and are they good enough, and can they strengthen them? But of course, backing up those NDCs is a lot of work on national implementation. And for many countries, particularly in Latin America, there's been a lot of interest in the use of carbon pricing systems. We are extremely grateful to the Inter-American Development Bank and to our friends at ICAP, the International Climate Action Partnership, for a kind of a team effort in preparing a report that takes stock of the developments on carbon pricing across the region. It's an exciting time because there's growth in carbon markets everywhere. There's growth in the use of carbon taxes as well. Carbon tax and offset schemes in particular that have shown a lot of benefits for rural areas where projects can be developed to be brought forward for compliance with carbon taxes in some jurisdictions. It's been a really creative time over the last couple of years as some of these systems have grown stronger. It's not happening in a vacuum. There are also activities underway throughout Asia and Africa. European Union pricing has also been strengthening this year quite a bit as targets tighten and as the energy system begins to adjust. So it's not just Latin America, but it's really important for us to take stock of exactly what's happening there. We've got a new report that surveys the recent developments, and I think for those of you that are preparing for COP, I understand some of our viewers today are already en route to COP. I'm personally already en route to COP, so it's really a good time to kind of take stock of where we are and have the latest information available. I'm delighted to pass the floor to Maria Neto, a longtime friend, and Maria with the Inter-American Development Bank is going to take it forward from here. But Maria, thank you for this collaboration. It's great to be working together on this, and the floor is now yours.
It's an honor for us to be here with you again, Dirk, and a long time indeed. And also it's a great opportunity to be here to talk again about the carbon markets and see the carbon markets moving back onto the agenda. As you said, this is a big effort we have been doing jointly to try to promote forward what is the state of these markets in the region and what is needed moving forward, and hopefully also with good signals coming from Glasgow COP. Basically, we have a busy agenda today with a lot of different interventions. So I wanted to kind of go through quickly with you with the agenda. We are going to have some general presentation about what has been these studies that we did together about the state of the carbon market. And then this is going to be followed by, let's say, some critical discussion from players, both from the public as the private sector, reacting a bit about what the status of the market is, but what is the perception also from a public and a private market player in terms of the next steps. So without delay, maybe I wanted to move basically to the presentation of the results of the report. The presentation also looks at both the sides of the public as well as private sector, voluntary market, and the evolutions on the regulated market. So maybe we can pass on to the next speakers. If Stefano, I'm going to start with you, I guess, right? Stefano is going to first give an overview, basically, as I was saying, a bit more on the side of the regulated market and how carbon pricing landscaping is moving in the region and what are the trends we saw on that side. And then we are going to have Katie joining us to talk more from the point of view of how is the voluntary markets moving. And I think we have a lot of insights also on the voluntary markets that are very important also in terms of recommendations on next steps on the markets. Often the discussions on the voluntary markets miss up, in our view at least, this kind of broader overview of what is needed also to better improving the ecosystems of the voluntary market. So I think also this is a great opportunity here to also listen to that. So we are going to start with Stefano giving us this brief overview. Stefano is from ICAP. He's the head of the ICAP Secretariat. He has been, ICAP was a great collaborator also with us in preparing this report. And it goes without saying, he's a lead specialist on carbon pricing. So Stefano, the floor is with you.
Thank you, Maria, and it's great to be here today. It's also been a particular pleasure to work with IETA and IDB on this report. And on behalf of ICAP, I just want to say that we are grateful for the great work that we've done together. It's a pleasure to be sharing the stage with Katie, who was one of the lead co-authors in the report. And as Maria said, I'll be covering the compliance side of things, and then I'll hand it over to Katie for the voluntary market segment of the report. If we can move on to the next slide, starting to delve into the presentation. And really, this is just meant to be a bit of the scene setter for the discussion we will have later. But at the same time, we wanted to use this opportunity to talk a little bit about what we actually found out as part of the writing process of this report, and as part of the work that we did jointly with IDB and IETA on this. And really, this work, as Maria and Dirk said, really came out of the realization that there's a lot happening in the carbon pricing and carbon market space in Latin America and elsewhere in the world. So we wanted to really take stock at this particular point in time on what the latest trends are, and especially we also wanted to reflect a little bit on what the pathway forward could be for carbon pricing in the region across both the compliance and voluntary dimension of the carbon market. So this work and the report really started from from looking at the bigger picture and what is needed in terms of reaching the goals of the Paris Agreement. It also started from the realization that there is an increasing number of net zero targets adopted by different governments that to date cover around 60% of the global emissions. But at the same time, a lot of countries are still lacking the near-term policies that are needed to start moving towards those long-term targets. And so we wanted to really have a look at what is the state of play for policies that are in place across the domestic carbon pricing dimension, across the international carbon pricing dimension, and what the role could be for private actors in the voluntary market if we are to start implementing action in the real world, and if we are to start moving towards those long-term goals. So on to the next slide, we also started with a bit of a conceptual framework on what typology of carbon markets exist in the world, and what is being implementing, or what is being happening in the region. And I will not go into details on this, but this is just to say that we mapped out different types of carbon markets, and more broadly carbon pricing policies across the compliance and voluntary spectrum. which are the main two dimensions that we looked at in the report. And again, across the domestic and international spectrum. So we really mapped out different types of carbon pricing, and we then checked on what was being implemented and what was happening in the region. Needless to say, what we found out was that there are really interesting examples and lessons learned across all the dimensions on this graph that can be observed in the Latin American region, and that there's obviously a lot of potential for that going forward. Moving on to the next slide, and just to give you a quick teaser on what's in the report. This really shows in a map format what we saw on the previous slide. So if you look at the region broadly, you see that there are a lot of examples of carbon taxes being implemented in different countries, both at the national and subnational level. So for example, Mexico has national and subnational taxes, and there are carbon taxes implemented also in Colombia, Argentina, and Chile. There are emission trading systems being implemented or piloted or being considered in the region. Mexico is going through the pilot phase of its national emission trading system. Colombia is taking steps to develop one, and Chile is considering the implementation of a compliance carbon market. And at the same time, again, this is where the international dimension comes in, because many of the countries that are represented on the map also participate in pilot activities under Article 6 of the Paris Agreement, which has the potential of moving carbon pricing to an international dimension going forward, and the experiences made with pilot activities are really significant in this sense. The voluntary market are also pretty much part of this picture, and you can find voluntary carbon market activities across the whole region. And I'll pass the floor to Katie to talk about that later. But before we get there, I also just wanted to say that after looking at what was happening in the region now, and on to the next slide, we also wanted to reflect a little bit on what the key lessons learned were and where this might take us going forward. So we really wanted to have a look at the experiences made with implementing carbon pricing activities and carbon markets in the Latin American region. So we looked at what the key steps in the implementation process of a carbon pricing initiative is, and these steps are taken from the PMR ICAP ETS handbook that we recently updated earlier this year. And we had a look at what were the key experiences made in the region for each one of these key steps, which can really be a useful exercise for countries that are going through that process now, or that might want to go through that path in the next few years. And so just to mention a few key takeaways from that part of the report and from that exercise, if we move on to the next slide, we see that, first of all, it's worth considering that carbon pricing initiatives are being implemented to pursue obviously emission reduction objectives on one hand, but they can also fulfill a broader set of purposes, ranging all the way from the use of revenues to alleviate other problems. So, for example, redistribution of the revenues to housing and infrastructure in different provinces in Argentina and Colombia, to again achieve the broader set of co-benefits that are usually associated with different offset protocols and with different project types that are recognized for compliance in different places across the region. On to the next slide. it's also important to keep in mind that the assessment and the implementation of CPIs in the region has been an extensive process that has benefited from international but also regional resources and cooperation, and it involved a broad range of local and international experts in the process. And this is really something that is key to the success of a CPI, and where there's a lot of experience and lessons learned already in the region. And also on to the next slide, another key aspect that we wanted to highlight is that CPIs are implemented in a progressive manner, and there's a good level of experience with that in the region already. So you can really see by looking at what happened in different countries and how different countries approach the implementation of CPIs, on how carbon pricing can be introduced in a progressive and stepwise approach to minimize negative consequences, and to make sure that the system can be set up and running in a progressive and gradual way, to make sure that the ultimate launch of the CPI is successful and long standing. And again, there are different examples in the region on both how different carbon taxes were launched and refined over time, but also in how countries took steps to move from one form of carbon pricing to another over time. Again, I'll keep it here, not to go into too much detail, and there's more in the report, obviously, but I'll now hand over the floor to Katie to talk a little bit about the voluntary side of things. Katie, over to you.
Great. Thank you very much, Stefano. Thank you, Maria, as well. And special thanks to the IDB team. It has just been a pleasure working with all of you on this report in the last several months. There's been a lot of energy and effort that's gone into it, and there's been an army from the IDB side, but certainly from the ICAP and IETA side as well. So a special shout out certainly to Stefano's team, including Victor, and then on our side we have Carlos and Antoine and Joseph, who really did a lot of heavy lifting, in addition to Lisa Spafford. So I'll just briefly cover the voluntary activities. Carlos, let's go to the next slide. Or the voluntary, I should say, market takeaways from the report, as well as some of the key messaging. But actually, first I'll just say, like, setting the stage challenge-wise, when you look at the latest UN synthesis report, you look at all the original and updated NDCs that have come through the gates. We're on the road to global GHG emissions being 16% higher than 2010 levels by 2030. That's if all the NDCs are achieved. And this is not good news, right? This is bad news. If we have a shot at limiting temperature rise to well below the 2 degrees by mid-century, we need to slash emissions by 25% below 2010 levels by 2030. So the moral of the story is that we are really facing some serious gaps in terms of both climate ambition and investments. They need to be filled, and we are on a hyper-accelerated timeline to do so. It means that we need to deliver the right incentives and price signals to the right communities and businesses. And the voluntary carbon market does have a critical role to play as a tool and a transition bridge to drive private capital into reductions at scale, but also the power of driving tremendous co-benefits and support a green recovery. And LATAM, as is displayed in the report, it is extremely well positioned to maximize climate finance, but also the co-benefits that are growing from this market. But it's really critical that we ensure transparency and high integrity over this journey. So from the report, LATAM, if you look at some of the regional trends, actually, no, go back one, please. No, go back, yeah. Thanks, Carla. No, go back, yes. Multiple drivers. So we have the voluntary carbon market participation, the growth, it's ESG, it's all this surge of corporate climate commitments and net zero commitments that seem to be coming out daily, and not simply, small scopes. These are large scope corporate commitments. It's also being driven by investor demand, market differentiation, reputational or supply chain risks. It is also about channeling finance, as I said, to projects that deliver independently verified mitigation action. So these are impact investments. It's enabling corporates and non-state actors to measurably, underscore measurably, achieve climate and net zero commitments. And it's supposed to be doing so in a way that complements internal decarbonization through the use of these verifiable carbon credits. That's in that the context of the mitigation hierarchy. Next slide, please. So when you look at LATAM regional trends, and these are showcased in the report, LATAM is currently the world's second largest provider of voluntary credits. It has around a fifth of the total global credit supply, and that was the case in both 2020 and 2021. The credit issuances are increasing, 2021 accounting for around a quarter of the global issuances, and this is compared to only 12% in Q2 2020, so not an insignificant growth. And then the majority of LATAM project types, which we'll talk about in a second, are coming from nature-based solutions, so then the forestry side in particular, and renewable energy. But these are set to increase on the nature-based solution side, that supply, and likely volumes will decrease on the renewable energy side. Next slide, and we'll dig into some of the graphs from the reports. So the voluntary carbon market credit issuances by region. This just shows the tonnage, so the volumes, million tons, and this is regional. So across the different regions, Asia Pacific is #1, and as I said earlier, you have LATAM that is comfortably sat at #2 in that gray blue. You have around 240 million tons total credits, and then around 40 million tons in LATAM. Next slide, please. And then we have the voluntary carbon market buyers and prices by sector. So this is really interesting. And I should have said earlier, a lot of this great work and data, it couldn't have been done without Ecosystem Marketplace and that team. We also lean very, very heavily on Trove and a lot of their work and numbers, figures coming out of the voluntary market globally. So on the voluntary carbon market buyers and prices by sector, it's really interesting to see the dramatic changes between 2020 and 2021. So in 2020, consumer goods were the biggest buyers, whereas in 2021, this year, you have energy companies that are now clearly the biggest buyers, with consumer goods now being at #2. In both 2020 and 2021, the financial sector was the third largest globally in terms of the buyers. And then you look at the average price differences, so interesting by sector. So you have the energy companies that are paying on average much lower prices, around $3.79 in 2021 compared to 2020, where they were paying around $5.71 US. Consumer goods are paying on average around $7.70 in 2021. This is compared to only around $4.68 in 2020. And then financials are paying quite low, around $2.28 in 2021. And this was compared to around $5.85 in 2020. Food, beverage, others, including technology firms, there's a lot of new players that are playing quite a premium coming into the market, and they're paying these higher prices that you're seeing at the right end of the chart. So it's important to just keep in mind that there's a major lack of transparency in these markets. It's why we have to rely so heavily on these surveys and data mining by Ecosystem Marketplace and others. It's a really opaque market, so it's made up of bilateral and OTC deals. So there's different contracts and pricing. And we are, though, seeing more and more deals that are occurring at much higher average prices. So even some that are to the tune of around $20, $30 a ton. But again, this is the snapshot based on the latest aggregated information and data coming in through Ecosystem Marketplace. Next slide, please. The transacted sizes and the average prices. So this is showing global sizes, so issued, and the average prices by project type, by forestry, land use, renewable energy, energy efficiency, fuel switching, and then agriculture on the right-hand side. Prices range all over the place, as you can see, from like less than $1 to around US $12 a ton. Higher prices are for forestry. In fact, highest in the forestry bucket would be for afforestation, reforestation, so not reduced emissions from deforestation and degradation, but afforestation, reforestation, we're getting the higher prices. Also agriculture, very, very small volumes in agriculture, but they are getting significantly higher prices in agriculture. And I think this whole space on agriculture and issuances with protocols under development and a lot of demand and co-benefits are set to increase over time. Renewables, on the other hand, are much lower, as you can see, and energy efficiency, fuel switching, it's kind of around that less than $1 to $2.50 mark. Next slide, please. And this is a snapshot, LATAM specific, looking at the project types. When you look at the credits that were retired, as you can see, that red bar, red plus being the highest volumes, renewables, that darker bar, number second, and then other nature-based solutions, that's where afforestation, the reforestation, the agriculture, they sit quite comfortably. Next slide, and these are just the wrap bigger takeaways, also blending some of the insights that Stefano had shared. LATAM is a growing hub of compliance and voluntary carbon market activity. It's also a hub for major innovation, and it's green financial innovation, it is protocol innovation, it is policy innovation that's occurring across the landscape. The next few years, really this coming decade, is a critical transition period for the voluntary carbon market. It will have really huge impacts on climate investment flows over the next few years. And the VCM growth, it's not only expected to happen alongside the compliance pricing instruments, but the voluntary carbon market, probably more than any other region, could play a vital role in being a catalyst and really being complementary to the LATAM compliance programs that we're seeing, where you could have government programs that adopt, if not heavily adapt, voluntary carbon market protocols, methodologies, infrastructure, other tools. So that's really important to watch to see how it evolves in LATAM. It's critical to send the right signals to corporates and investors to grow demand, to create markets capable of driving high integrity credit supply at scale. And I'm sure that we'll circle back to this during the Q&A and questions, but the high integrity piece is so fundamental. And then advancing LATAM carbon pricing instruments, they can certainly be further accelerated through strong and robust regional carbon pricing and market cooperation. So this is through international linkages and carbon clubs, and fingers crossed that by the time we get out of Glasgow, we'll have more clarity on Article 6 in order to accelerate more and more of this carbon market and club cooperation across borders. So thank you very much, and I will pass it back to Maria.
Thank you so much, Katie. I'm not sure my video is working. I hope I'm appearing here in the camera. Reflections very quickly, from these results. I think on the one hand, what we see is that the region has been particularly dynamic. We saw many governments actually already giving some kinds of signals with regards to the carbon pricing and having policies developed. At the same time, we see that there is very different approaches to that, and maybe some work we need to do now to start thinking on, particularly on the Article 6, if this moves ahead, and eventually also if we're going to have national compliance markets, how this is going to be moving towards a more kind of a harmonized approach, and also how we can promote the adequate kind of registries that can boost, let's say, these markets. But at the same time, I think what Katie shows here is that there is a very dynamic voluntary market extremely dynamic, but at the same time with still some important deficiencies that we need to try to resolve, no? The differences in prices and also the way we are looking at the market in different sectors, no? Shows potential, but also shows some, let's say, barriers for the market to really boost. And I think among them is indeed the need also to start promoting more transparency and integrity in the market in a way that first the deals themselves become more transparent so that people can know what the spot price is, but also to understand better what is the traceability of those different credits and where we can find information about them. I think this is one area that we'll talk later also, is how we IDBC, we can kind of try to support these ecosystems, given that indeed there is still a huge problem for this market to boost in terms of giving more credibility and comfort, both to the buyers and sellers of the credits, but also for anybody who wants to participate in the market to know where is the market at and what is working and not working. You know? We're going to have now a bit of a kind of a reaction from two players. We have Luis Gilberto Murillo, who was former Minister of Environment and Sustainable Development in Colombia, and is also a professor at MIT. And we will have also Mariana Vendramini. She's director from Ecosecurities in Brazil. Luis has been playing a huge role in Colombia in trying to promote this market early on, playing a role first as a regulator, now as outside, also looking at how the market is evolving. I would love to hear from you, Luis, a bit what have been, you know, your impressions of what the role of the government is. And Mariana is working with Ecosecurities, which is an important player in the private sector market and have been following up also a lot of the voluntary market. And we'll also kind of ask her to react also from the private sector where she sees the opportunities, but also the stumbling blocks. Starting with you, Luis, precisely, you had been trying from the government point of view to develop this market. Would be interesting to understand from your side what worked and what did not work and how you see the market evolving now, which is a good news, but also the things we need to be careful about to ensure that this market can truly be boosted, but also at the same time, a proper integral market that ensures also, as I was mentioning, transparency. No?
Maria, thank you very much, and really happy to be here and to share with you and Mariana and the presenters my perspective on the report. First is that, and it is fantastic that the region already have this report available. I remember when I was Minister of Environment and Sustainable Development in Colombia, we were just working on creating the carbon tax and the neutrality mechanism. But at that time, this kind of report were still very we're not dominated in the sector. I'm very happy to see the development of the carbon market, both regulated and voluntary. And the report really gives very important perspective for policymakers. One is that you can see, and the main interest of policymakers is to see that this instrument can help to reach the ambitious goal of the within the framework of the Paris Agreement. In the case of countries like Colombia, and is the case for most of the countries in Latin America, Colombia have increased its ambitions in terms of reaching its goals within the national determined contributions. We went from 20%, and now Colombia is trying to reach 51% by 2030. So having the possibility of relying on carbon markets and carbon pricing mechanism to reach this goal is very important for policy makers. And the report just is showing that. The second point that I would say is that the relevance of the report, like the timing of the report. We are just all of us preparing to go to Glasgow to the COP26, and very important discussion will happen in there. And I hope that the international community will reach agreement in different aspects of the Article 6. This report is very important for the negotiators of the region have this perspective. And also, I wanted to mention that in terms of policymakers, it's not only, and it's the case for Colombia particularly, it's not only reaching policy goals regarding the Paris Agreement and regarding current emissions. It's also the goal, other policy goals related to biodiversity conservation, all the co-benefits related to very important to get into regions that have been isolated and attracting new funding, not only for biodiversity protection, but have availability of energy, particularly renewables. Is also the policy goal, and I'm looking this from the perspective of policymakers when we were working on these issues, is also the goal of having some measures of social inclusion. The social policy goals are very important regarding the carbon markets, particularly in the model that Latin America is working on in terms of nature-based solutions, because it's including communities. In the case of Colombia, for example, through the RED projects and the carbon market mechanism, some communities that have been isolated, like Afro-Colombian and indigenous communities in very important areas in terms of strategic ecosystem, are receiving funding that they didn't have available before. Some communities in the last year received more funding that they were used to receive through the state government channels. So that's key in terms of the impact from the perspective of policy makers. Also, to attract new resources, because resources are scarce. To reach the goals of Paris agreements in terms of mitigation, adaptation, and financing will be very, very hard. And the carbon markets open the opportunity to attract more resources with the right policy tool equation. And also, let me mention that this mechanism can help to increase the state presence in some isolated communities and change some factors that affect the climate investment in these countries. I like the report. One factor that is key and is the dissemination of good practices. I remember in one of the workshops that we had before, we found the need to have more exchanges of good practices between countries, particularly policymakers, and also to move into harmonization of some of the rules and regulations. In this report, showing the concrete country practices in the case of Brazil, Colombia, Peru, and Mexico is key, because that helped these countries really to start working on this harmonization. And also to move into something that we discussed in the past, that was to look for some kind of regional carbon market, which is a dream that we have at that time. And also, let me highlight the issue that was Katie mentioned, and also Stefan, about capacity building, which is very important, particularly in monitoring, reporting, and verification, transparency, and integrity of this market. In the case of Colombia, we developed some regulation, but what's happened is that the implementation of those regulations have been very slow, and countries need to move more into increasing the capacity to provide assistance to this market. Some issues that I really would love to see in future reports that I would like to highlight. The report is very concrete in several issues, particularly from the demand side, and also from the supply side. But I would add something that is more in relation to the political economy of continuing implementing these carbon pricing instruments in the region. And that's very important because although some countries are moving forward and still have some political economy problems in implementing this, some other countries are lagging behind. And I think that the region have tremendous opportunities and need to move as a region. And I'm saying this because you can have, and that this affects also the typology of the countries, not only the typology of the market, but the typology of the countries. You can move from countries that are saying that they don't want to see the market mechanisms as an instrument for reaching these goals. But there are other countries like Colombia that have a very decentralized system, and many countries in between. Something like that, at least some reading of that would be very helpful. The other is, the second factor that I will mention is the issue of the culture of the market. What we call the Colombian model of carbon markets, we have this policy innovation of having the carbon neutrality, like putting the funding in the voluntary market. That's very important, and that really boosted the market. However, that created some situation of collaboration between the government, the private sector, and communities, and they created this association of agents of the market that is moving the market forward and also protecting what we already got, protecting the achievement of the market. It would be very interesting to see more on those like context-related aspects that are positive to continue developing this market, and what is the level of collaboration and also the level of conflict. The other factor that I would, in terms, because this market need to have a very concrete culture that is more into increasing the core benefits of the implementation of different projects. The other factor that I would mention is to include more reading from the demand side of the mining sector in Latin America. The mining sector, in the latest numbers that I saw, the mining sector, I'm mining engineer, the mining sector is like becoming one of the key sectors for the post-COVID recovery. At least the numbers from Colombia shows that. And they have the net zero commitment. So this is how this sector is really demanding carbon certificate for the voluntary and regulated carbon market in the case of, but in the case, for example, of Colombia, how they are demanding this or not. And in the report still, I didn't see that separation of this aspect of the demand. And I insist in the case of Latin America, the mining sector will be very important. It will be increasingly important. And lastly, are the issues of justice, social justice. In the case of Colombia, in the way we structure the voluntary, at least we promoted the voluntary market, they have a very important component of regional and ethnic justice, because these actors are participating very actively in this market. They are getting new resources. They trust their partnership with the private sector, and that's a good model. And that aspect need to be, I would love to see that in future reports, because that's very important, even for implication for other countries in Latin America and implication for other regions in the world that can rely on this market to include more this component of social justice. And that should include a component of justice in carbon prices, which is, and in the last summit in Latin America was a declaration in that regard, and I think that that's key. And I would say in closing that obviously this report is very important. I will promote this report in the way I can. There is a lot of information for policymakers to at least rely on, a lot of evidence. And I concur with all of you that Latin America have a tremendous opportunities in developing carbon pricing instrument, but particularly carbon markets, because it's the opportunity to fulfill the goals of the Paris Agreement, to increase ambitions, attract new resources, but at the same time to provide a good path of development for a lot of areas and regions in different countries in Latin America and the Caribbean. I would add the Caribbean, because we need, in the typology of the country, don't forget about the Caribbean. They have a lot of excellent opportunities regarding to the blue carbon market. And blue carbon really is an emerging area that also needs to be covered. I'm sorry that I spent more the time that I was supposed to, but thank you very much for the invitation. And you know, I'm very excited about carbon markets and carbon prices. So thank you for the report. I will promote it.
Thank you so much, Luis. I mean, a lot of insights. I think some comments you made are very important. On the one hand, obviously, when we talk about the integrity of the market, is about getting regulations, as you said, developed, but then they need to be triggered down, and that is important. And there is a lot of still work to be done on that. You mentioned about the co-benefits. I think this is also a very good, important point. You know, when we talk about the integrity of the markets, apart from at least being transparent of what are the methodologies and the ways to estimate the CO2 equivalent reductions, emissions reductions, we need also to be able to more transparently, and I think investors will be asking this more and more, to give a storyline of also what are the underlying assets, who is actually behind the actual credit, and also what is the positive opportunities for a policymaker to promote emissions reductions programs and carbon pricing that could also develop, let's say, financial inclusion of populations that sometimes may have more difficulty to be integrated in the economy, co-benefits on biodiversity, and as you said, also value more our, let's say, renewable energy assets. No? You also mentioned something that I think is very provocative and important. Obviously, carbon markets is not a panacea. As you said, there could be very different ways to apply carbon pricing, and the carbon markets is a flexible mechanism for particularly industries that in their transition to the low carbon will have difficulties by the way they are structured to, in the short run, move as quick as we would need to a green path, but that need to start demonstrating as right now their commitment and could use the carbon credits. And is a very good point to not only look beyond Latin America, but start understanding how our national governments and national industries can take benefit of that as well, and how we can accompany also these low carbon paths also from the side, as you were saying, mining industries among others may have an important role to play in that. I think a lot of your suggestions also on the different ways that governments are doing that, and also how we can promote more, let's say, knowledge sharing about the differences is very good. Of course, we have very differences, and it's a good point, you know, subnational levels in some of the countries in the region, particularly countries that are large, such as Brazil, Colombia, Mexico, or Peru, or even Argentina, that have a lot of different extensions also of differences within the territories. We may need also to consider how the piloting of those kind of subnational arrangements are being undertaken. Also, very good food for thought for improving the report. We really hope that the report brings a bit of discussion as well already, as you were saying, for policymakers to start thinking of next steps. Certainly for IDB is also food for thought for what are the next steps, and lots of ideas to share with you, Luis. Now, Mariana, turning to you, as we were mentioning also the voluntary carbon markets have boomed, but also have some failures or issues that need to be improved. As Luis was saying also, the governments may have an important role to crowding private. One area that we have been seeing, at least as IDB, is that there is still a lot of confusion in the market sometimes for also lack of regulation, not necessarily for developing regulated markets, but at least regulation that gives some recognition of the existence of the carbon credit and provides, as I was saying, at least some kind of certainty about the pricing in terms of obligation for disclosure when there are deals being done, and if not, even better disclosure regarding methodology. So I'd like to give you give a bit of your overview of what you see the voluntary markets in the future being, and as one director of a team trying to develop these, what are the challenges and things that you see ahead as crucial in the next steps?
Thank you so much, Maria, and all of you for the invitation to be here with you here today. It's a pleasure to be discussing this, such an important paper for the market. I just wanted to make an adjustment. It's Mariama with a name, and it's perfectly okay because it's common for people to call me Mariana. Let's go. So what I think, what we thought about the paper is it fulfills a gap that we have in Latin, and I think worldwide as well, covering the overlap or bringing together both regulatory and voluntary carbon markets, because so far we had for years, and as you also use their data, they have been pioneering and at the forefront of bringing us information about the voluntary carbon markets, and also the World Bank with the states and trends of carbon markets. But I understand that you fulfilled an interesting gap there, bringing together both worlds and also recognizing that they're going to converge somehow and that they're learning from each other, right? So we started in the beginning with the CDM. We had a boom in the markets, then the market, as all of us know, started diminishing, and then the voluntary carbon markets that surprisingly was on the sideways of the CDM started growing a lot. Also methodologies that weren't much accepted or used in the CDM as forestry bread, right, that are now getting more and more momentum, as we just saw on the market. So I think that the report is capturing that we're living a new wave, a new momentum on the market. So with these new methodologies, with these new types of projects, and from the coexistence of the regulated carbon markets, CPIs and pricing instruments, and the voluntary carbon markets, so that each one will learn from each other, but I believe that they will coexist. Of course, we need to get to scale with regulated markets or carbon pricing instruments. They will be extremely necessary for us to reach the ambition that we need, as Katie was remembering us. But I don't see a world where the voluntary carbon market will not exist anymore. I think it's complementary, and right now it's acting as a laboratory of initiatives and projects and learnings that we can take to the mandatory and pricing schemes, and you've captured this very well. So I also wanted to comment that you were able to capture very well what we're seeing currently on the market, that is the different types of prices for each types of projects. That's very common, or that's intrinsic to the voluntary markets, because it's at the end, financing a project. So, and each project has its own cost structure. Of course, we're acting more and more towards having a standardization so that we can have the market scaled up, but we still have these, in one hand, different cost structures, and in the other, different perceptions from the buyers of how it should be valued. And it's interesting, I thought that it was interesting to see there that we've been already seeing in the Crystal Marketplace reports, red being one of the main project types in terms of volume. This also represents what we expect from Latin, having large tropical forests and being home to the Amazon and having a huge area also to be reforested. And so getting to the second point that I was gonna bring is that the report also is showing the different price of red and reforestation, and bringing forward also a concept that it's no longer time to be at the low-hanging fruits. We now need to go further to more expensive projects. So when we talk about reforestation, we're talking about expensive projects in terms that we need to have upfront finance to finance activities of planting and mobilizing an area and people to plant. So we're talking about a different type of projects, and then we see a higher price there, and that it's that's why we see those differences. So when we see what's happening throughout the data, it mirrors what we see, the movements that we see in the market and the needs that we have from now on. So to shift from the low-hanging fruits, the lower price projects, to a next stage, and then I think this is very well captured in the report. Also, what I see it's very interesting is that we have these pricing instruments and these schemes here in LATAM that are advancing, but we also have many of the corporate and the private sector pledges happening here. So when I like how we can put together the information that 70% of GHG emissions are covered by net zero targets, while we have around 20% of emissions covered by CPIs. So when we have these two informations compared, we see that the private sector is engaged, but at the same time, we will need regulation to speed up. So I think that the report plays a very important role to bring information to the market, and it's not only bringing information just okay, there's data there and then we can go and check it, but when we talk about the daily basis, the day-to-day market, this is one of the main things that will support the markets in lowering transaction costs. So we have different types of actors, private, public, different types of companies. We see companies that have been active on this market for years and years and participated of COPs, and others that are just being started, especially when we talk about regulated markets that are to come, that there are new players that are willing to engage. So the report is very important, as Luis have already mentioned, right, for capacity building, for standardizing the knowledge across the players. And on my view, it would be important for us to have these updated in some periodical basis, so that we can have this information put forward and then act more and more lowering our transaction costs. Because if we have access to information, how are the prices, how are the volumes, and especially on the qualitative sides of policies and how the governments are implementing their pricing instruments and how are these policies evolving, that will help us see the signs of the market and make more not complete, but subsidized decisions. So I'll end here. And
thank you so much, Maria. Very, very thorough thoughts as well. And I agree that it's important to think about continuing having the report, but also mainly also thinking about what does this does in terms of recommendations also, and thinking about the results one by one on what are the next steps. And also, in a way, using the data for stock taking also of what we are doing and what needs to be done, and also very good thoughts also in terms of this linkage, why the regulated market or also the governments have an important impact to play to voluntary markets, and also how they can learn also from the piloting on the voluntary markets, things that could be better addressed. No, there's lots of work to do, I think, towards the next years. Indeed, what you were saying also, the trial of this study was not necessarily to do yet another report. We know there is a lot of reports being done about the carbon markets, but it was really to give us a snapshot of what is happening, both in terms of regulated and voluntary markets in the region, because we indeed saw the lack of data simply to be presented in a very transparent and clear way in terms of what the governments are trying at least to do, and at the same time where we are at with these markets. And to be very frank, I think that was a challenge for us and for IETA and for ICAP, was how to ensure that we can get all the relevant data, particularly as the markets are still an incipient market that is being developed as we go. No? We are now going to move to our closure, basically, of the event. We are here really mainly for launching this report. It was really a pleasure to have both Mariana and Luis with us, commenting a bit on the report, giving us some suggestions on how to improve in the future. Also was great to have Kate and Stefano to give us an update from the ICAP and from IETA about the report. We have some closing remarks from Susana Guerra from the IDB. I don't know if Susana is already connected.
Yes. Hi, Maria. Can you hear me?
Yes, we can hear you, Susana. Would be great to hear from you some final notes about our dialogue and about the report. As mentioned, for us in IDB, this is an important, let's say, benchmark here that, as Mariana was provoking, we hope we'll be maintaining and preparing for the reports in the future. Susana, the floor is with you.
Thank you, Maria. It's a pleasure to be here. And I think this report is really emblematic of this tripartite collaboration, of which this is my second only seminar in which I participate in my 3 weeks so far at the bank. So I can see the solid collaboration between the IDB, ICAP, and IETA. So it's really a pleasure to see. And I was able to watch a few of the presentations. And I want to echo the comments, but not be repetitive. But I think Katie's presentation speaks to broadly 3 externalities that you see from this from the development of the voluntary carbon market. One is the environmental and climate externality. The second one is an innovation externality, and the third one I would say is a network externality. So I think each one of the points mentioned, they really speak to these three different types of spillovers from this development of the market. And so what's the role of the IDB, and how does the IDB facilitate to bridge and mitigate potentially market failures that we see? And Luis spoke a lot about the importance of dissemination of good practices and being able to tangibly show them in a way that it encompasses cultural contexts and the way different markets are developing on the ground. And so we're doing this on several fronts. The first one is sharing of experiences and showcasing the main issues related to the integrity of credits, transparency of methods and market actors, and the role the governments play in these markets. We also have created a knowledge page on the carbon market. It has information about evolving trends, publications, and webinars. We had an initial webinar series focused on Brazil that brought international experts in, and we also are soon to launch a new study on legal analysis of milestones and looking more closely at the legal and regulatory framework, which in many of the presentations was alluded as a critical issue in terms of the credibility of this movement going forward. So with that, I think the key and principal element in all of these fronts is really working closely with our partners, working closely with countries, so that we can move forward in this dissemination of best practices and work towards mitigating these market failures in the short and medium term. So congratulations to the teams at the IDB, at IETA and ICAP for this wonderful effort. And I look forward to seeing you again very soon and celebrating a few more other forms of knowledge dissemination that we have in the pipeline. So thank you, Maria.
Thank you so much, Susana. With that, we are going to close this webinar. The report is with all of you. We are really happy here to have collaborated with ICAP and IETA together. Big thanks to Katie, Stefano, to Dirk, and all the team, Carlos. Also, big thanks to Luis and Mariana to share their thoughts from public and private side, and Susana for closing remarks. We can hope that we are going to continue doing, as Susana said, more of these, and it's here, you know, our, let's say, commitment to be following up with the recommendations. Feel free also to reach out to us to give us more information. We'll be very happy also to follow up with you and also disseminate further the report. Also, just to let you all know, there were some questions to us on whether the report is going to be translated to Spanish. We hope to soon have also a Spanish version of the report. And we hope also that we can be meeting soon next year to be talking about the next steps after the COP at Glasgow, which we hope and it needs really to get some step forward for us to be able to promote in our economies the carbon pricing and reaching out ambitious Paris Agreement. Thank you very much. Nice to see you all, and we keep in touch. Ciao, ciao.